Platforms on Cardano like AADA Finance and other lending platforms give us access to the financial tools that the elite have. When I say this, I mean like they're not selling stocks to buy things. They're not, selling their positions in SP 500 to go buy things. And we should not be selling our crypto to go spend money on cars in the real world or paying off loans, etc., etc. I want to show you how AADA Finances help you spend your money, aka your crypto, like the elite, and what the elite would do if they were in your position holding crypto. So currently AADA Finance is on its V1 platform, which basically you can do the normal things that you do on lending platforms. Longing, shorting, peer-to-peer loans, hedging, putting in liquidity requests, putting in liquidity deposits, making interest off your Cardano native asset positions by loaning them out to other people. And let's say you need to get a loan, you need to pay for something in the real world, whether it be a car or student loans, or you have a doctor's appointment you need help paying for, and you have X amount of crypto and you can take a loan against it. You can get some cash to go do that and then pay your loan back in due time with just a very small interest rate. So this is what AADA Finance currently allows. It's a very standard basic peer-to-peer lending protocol, and it's been doing really well in the Cardano ecosystem, both locking up total value locked and providing a asset to users that is seeming to be what they want to do. People are using AADA Finance a lot more than you would ever imagine, and this is just the V1. If you want to transact like the elite, technically all you need is this current V1 platform. There are some things that it doesn't do as good as how the elite trade on their stocks and take loans against stocks and real estate, such as really long loan terms. AADA Finance, you normally don't see things over 180 days or something, or a year, right? So that is one downfall of AADA Finance. There's other platforms that kind of let you re-up a loan if you're doing a business to consumer loan, such as maybe a Liquid or an Indigo, where you have the ability to re-up your loan. AADA Finance is more you set your terms, you lock it in, and then you need to pay back in a certain time, because the other person you're dealing with on the other end is another Cardano user. You're not directly dealing with AADA Finance, so there's not really a way to re-up a loan. But this is still a very good way to use your money like the elite do. If you have if you made $1 million on SNEC and now you want to go buy a Corvette, you don't need to sell your SNEC position to go get that Corvette. You just need to get a loan against your SNEC that you're holding, especially if you think it's going to go up further in the future. Get a loan against that SNEC, get it in AADA or whatever you can sell for dollars. Most likely it's going to be AADA. So you put SNEC in as collateral, get some AADA, sell it on the open market, buy the Corvette, and then, use your money to pay off the SNEC loan in due time when it's due. This is how the elite transact. They never ever sell out their position. Elon Musk doesn't sell Tesla to go get his house. Bezos doesn't sell Amazon stock to get his boats and his cars and his mansion, right? This is how we need to reprogram how we're thinking about money in order to make the best of DeFi. I don't want to go too deep into this, but right now the main thing that you look at when you go to AADA is the market. When you launch the app, is go to the market tab. You can see liquidity deposits and liquidity requests. Liquidity deposits are basically people saying that they're ready to give this loan right here. If you accept it, you can have it. And then liquidity requests are the people that actually are ready to borrow. So you can see there's always a lot of deposits. People are always ready to give out loans on their own terms, right? But the big thing for me is looking at liquidity requests. These are people that are actively asking for loans. They're asking for you to supply them with the money that they want. These are very motivated people, and that's why this is always empty. This is where you want to look, is liquidity requests, because these are people actually applying for loans that are ready to take them. Liquidity deposits, anyone can make a deposit and it can sit there forever. Liquidity requests are people that want to get into a loan position right now, and they need you to help supply them with money, and they'll pay you interest. Also on the homepage, I think it's really cool and important to look at that you can see this yellow section of the average APR. The current average APR is about 25%. So you might make a 5% interest on a loan, but the term's only 30 days. And what they're doing is this number, this APR, it's a yearly return. So if you extrapolate that out on average, if you were to do that every month for 12 months, you'd have an average return of 25% is what they're saying. So your loan might not last a whole year, but if you were to take the average of all loans on AADA Finance, you're sitting at around a 25% return on whatever AADA you currently hold if you really grinded this out and made a deposit every time your other one expired. Now, the main reason you might want to look at AADA Finance right now during its V1 era is that when it gets to its V2 era, the platform becomes significantly better, both for users of the platform and token holders. Three things that they're looking to implement is revenue sharing. So if you hold the token, the AADA token, you'll have the ability to stake it in their V2 and like help the protocol's liquidity, and you'll get rewards from that. Also, they're thinking about introducing something where you get a portion of the transaction fees on the protocol for token holders. The next thing they're going to have is NFT bonds, which looks like might actually be implemented on the website right now on the application, but in V2 it'll definitely be. And instead of making your loans from like wallet to wallet, tying it back to the wallet, you'll basically get a receipt, which is an NFT, and the loan will be tied to that receipt. So if you get into a loan and you don't want to deal with it anymore, like if you're a borrower and you get an NFT bond as your like receipt, and you don't want to pay it back, you have the option to sell that receipt on an open market, maybe like JPEG store or something, and then someone else can take over your loan and repay it. So that's another option. The third thing that it's going to have is liquidity pools and staking, which again is what I already mentioned with the revenue sharing, but a way to increase liquidity on the platform and make like loan pools better. This pooled lending mechanism will have like lenders to the pool and borrowers from the pool, and then the pool will be controlled by smart contracts. And so it's just a way to make lending and borrowing more seamless with more money collateralized into like one entity. And it's just like staking, where it helps the swaps be more efficient. Lending can be more efficient if we pool the lending and have smart contracts control the lending and borrowing situation. So these are all the things coming in V2, which will help you manage your money smarter and take better loans. All of this stuff on the V2 is on their GitHub website or like on their platform website. You can go take a look at it. But these are the big things, especially that AADA Finance revenue sharing. If they're willing to give a portion of their transaction fees to AADA token holders, that is a huge reason to hold this token, especially right now during the bear market, because AADA Finance looks like it's only going to be growing from here, especially if it starts moving in a way that it becomes more seamless for the user, better user experience. If people start making a lot more money and have more reason to use it, like right now, a lot of people don't have a whole lot of reason to take a loan out because they have a risk of being liquidated from their collateral and health of the loan diminishing. But as we move into that bull market, loans become more attractive as your collateral is worth more and the health of your loan gets better and better and better. So when I talk about the AADA Finance token part of the platform, if you ignore the platform, we've talked about what the platform is and why it might interest you, why this product has something going for it, right? Now, what if you want to be a holder of the token and try and earn yourself some of those staking rewards or transaction fees? What should you be looking at? Well, the first thing you should be looking at is everything we talked about. You should look at the platform itself. What is this platform offering? Has it been serving the Cardano community? And has the community actually appreciated this? I would say yes. And you can see a lot of those things in the total value locked on the platform. It's been moving for a year plus now. The platform's never caused anyone a lot of issues. It's overall respected in the community and seems like a hidden gem kind of. If you really look at usability of the platform, revenue it's generating, what it's providing, and how it fits into Cardano. Okay, so that's the first thing you want to look at is like, what is the product and how do you as a holder earn money from that product, right? Kind of, does that make sense? That's the first thing. The second thing is like, what is the fully diluted market cap? And the reason we want to look at the fully diluted market cap is we don't want to be eaten alive by token inflation. I believe about 50% to 60% of the tokens might be in circulation right now. I know they have a total supply of about 29 million tokens. Yeah, 29.5 million tokens. About 20 to 25% of those tokens are allocated to the team and marketing and strategic advisor, stuff like that. And then 75 to 80% are going to be given to the public through private sale, public sale, which have already come, and then through staking and governance rewards and other platform rewards. So the majority of the tokens are going to be given out to the public, which is good. We want the public to have a lot of control, but we also see that about 20 to 25% is reserved for the team and the partners and the marketing and stuff like that. Our fully diluted market cap is currently 57 million. And what you can do with this is take a look at the Ethereum-based competitors, the Algorand competitors, the Polygon and the Arbitrum competitors. What kind of fully diluted market cap are these platforms having? What kind of usability do they have? What kind of utility do they have? What services do they provide? How respected are they in their community? And how does AADA Finance stack up to that? Coin market cap currently says that Aave is sitting at about an 800 million fully diluted market cap, Compound 260 million, Curve 2 billion, and they're saying that currently about 13 million of the total 29.5 million AADA Finance tokens are in circulation. So that number could be a little bit off, it could be a little, but it's somewhere around 50%. The way that I kind of look at this is that The platform is a usable platform that earns money, and they're willing to share that money with holders of the token, which further incentivizes people to hold the token and let the price of the token go up because there's inherent value in it. The second thing I look at is that the platform works well and it does what it's intended to use, and the people in Cardano actually want to use it. The third thing I look at is the Ethereum competitors at the top of Ethereum. If you average them all out, they have somewhere between a 1 to 500 million fully diluted market cap between like the top three platforms. AADA Finance is definitely one of the top three platforms for lending on Cardano. So does that mean it's going to have a 500 million fully diluted market cap? In the bear market, does it mean it's going to have like a $1 billion fully diluted market cap? I'm not sure. I definitely think it will have a higher than 57 million fully diluted market cap this time next year. So that's what I look at for an investing. I don't know where the top is. I just know that I think this time next year in 2024, AADA Finance will probably be worth more than a 57 million fully diluted market cap. Personally, I wouldn't be surprised to see this sitting somewhere between like 2, 3, 4, 500 million fully diluted market cap, in sometime in 2024 or 2025. Again, the reason I look at fully diluted market cap is you do not have to worry about token inflation when you look at the fully diluted market cap. Fully diluted is best for long-term investors. Short-term investors can look at the current market cap because the token inflation will not affect them a whole lot by the time they're in and out of a position. But if you're holding a token for a long time, fully diluted is the way to go because you will be eaten alive by token inflation if you do not account for it. This is AADA Finance though. They have a lot of things coming. Currently, they do a lot of things well. Lending and borrowing between people on Cardano is their bread and butter. Through those kind of lending and borrowing situations, you can do longing and shorting, although it is a little bit hard because you have to do loan after loan after loan and hope people pick it up. If they don't pick it up, you don't get the long and short. So that's kind of harder. Maybe they should make a more automated way to do that, kind of like in the stock market. Maybe liquidity is just not big enough, or the fact that you have to make a different transaction for each one of those makes it a little bit harder, but they have these aspects available if you want to do it. The second thing that they're doing is that whole V2. They're going to let you use your money like the elite a lot easier by letting you trade your receipts for bonds on the open market as a borrower if you don't want to pay your money back, or letting you have pooled lending so you can get better lending terms and interest rates across the board. The other thing is the revenue sharing. If you really believe in a project like this, you could be buying at the ground floor right now. You kind of got to analyze where that's at. But this is AADA Finance, a core functional project in Cardano's DeFi. And if you are looking to take a crypto collateral backed loan, whether it's for buying more crypto or buying a cool Corvette or something in the fiat world, I highly suggest you take a look at this platform and see if it's the right fit for you. Other than that, I hope we have a great weekend coming up, and we'll see you in the next video.